All right, welcome, folks. Thursday, April 30th, 2020. I'm Rob Tetrault from robtetrault.com, portfolio manager here at Canaccord Genuity Wealth Management and the Tetrault Wealth Advisor Group. Thanks for joining us today. Really excited to be here with you guys again today to tell you about the news, tell you what's happening in the markets, to take your questions live from all the viewers. Today, we will be taking a lot of questions, any questions with respect to the market sectors. We're going to be talking about the headlines. We'll do a bit of storytelling. Really excited about our guest. It's been a crazy month of April. The best April actually since the best month since 1987. So I'm thrilled to have you guys here. Mox, let's run that disclaimer real quick. All right. Reminder, this is not investment advice. Don't take this as investment advice. Thrilled our guest today. He's joining us live from Marchand, Manitoba. This gentleman has been the most influential person in my entire life in the stock market or with anything. Him and my mom have been the two most positively influential people in my life. I've learned everything I know about the stock market, about investing, about making decisions in the market from him. He's got a very diverse background. Was licensed in the 70s, traded, worked at the credit unions as a, was a president of a credit union, then worked in the markets for a while, was an investment advisor, as a bond trader, eventually a business owner, philanthropist, real estate developer, investment banker, successfully raised billions of dollars of capital in Manitoba here for publicly traded companies. He's mad at me right now for giving him such a great introduction. All right, that's enough. Let's bring him in. Claude Tetrault, folks, my father. Claude?
Hi, how are you?
Good to see you. Good to see you.
Yeah.
What a crazy month of April, eh? Like we saw a crazy rally here, the best month of the stock market since 1987. What are your thoughts on the rally here?
Well, I mean, it's just been a crazy quarter completely, right? I mean, March was just unreal, right? We rarely ever seen a drop like that, and then to so quickly come back. Like our April performance is almost unprecedented. I can't recall seeing the speed of the decline in March and the speed of the rally in April. It's unprecedented.
Yeah, I want to take you through some of the numbers here. I don't have the exact final day market numbers because it just closed, but basically, let's go through some sectors here. First of all, the financials ended up finishing the last 4 weeks only up about 10%. The energy index was up big; they were up about 33%. The bank, life insurance companies, they were up about 8%. So they were, and the consumer staples. So those three, life cos, financials, and consumer staples were the laggards in the month of April. And obviously the big winners in the month of April were gold, energy, and kind of anything materials and infotech. What are your thoughts on those? I mean, it's to be expected that some sectors are going to rally more than others. And in this case, the ones that got harmed more rallied more than others.
Yeah. So on the oil, don't forget that the energy stocks had been the hardest hit, right? I mean, it had started back in January and it had dropped so much. So you could expect a rebound, a technical rebound, regardless of what happened to the commodity itself, because the commodity itself hasn't really rebounded. As far as the financials, it's a little more difficult to figure out because they had dropped in the 30-ish range and they haven't rallied quite as much because there's still more fears, this uncertainty about the economy and people paying their loans and that kind of stuff, and people paying their premiums for insurance companies and all of those things. So there's a lot more uncertainty on the financials than, let's say, the commodities, which is closer related to the price of the commodity and the rebound.
Now, the actual indices, if we take a look at the TSX on our wonderful ticker there at the bottom, so the S&P 500, it closed at 29.14, the Dow 24.3. So those numbers, I'm going to say relatively close to about half the gain. I think we bottomed right around 18,000 on the Dow. We topped close to 30,000. I'm using round numbers here. We're right around 24,000 now. So we've regained about half of the dip, roughly, right, Claude?
Yeah. Yes, that's correct. Roughly half. Yes.
And the talk of a V versus a W versus a Nike swoosh, there's a lot of people talking about what the recovery will look like. What does the symbol look like? So maybe you could take us through what a V is, what a U is, what a W is. Obviously, people aren't stupid, but I think it's important to differentiate them on a recovery here.
Okay. Well, as a V, it's almost like what the letter indicates, right? And the economy as reflected almost by the stock market. So right now we have a V pattern, but as you're writing, a V can turn to a W, okay? But it rarely turns into a U. So right now we have a sharp down, a sharp up half, and what it refers to is a quick recovery, and whereas the U means that normally it's more associated with a recession, whereas we go down, people lose their jobs because of business reasons, etc. And it does take 2 or 3 quarters to recover, hence the U. Now the W is more, in this case, why people are talking about W is, maybe the second wave of the coronavirus, in the sense that, okay, we've had the sharp drop, now we've had the sharp rally, and now we're sitting there at the top of the middle of the W, and we're all debating, like, is it going to continue to go up, or are we afraid that, the coronavirus, the economy will take a lot longer? And if the fear comes again, obviously we're going to go straight down. And then, of course, we would have a W instead of a V or a U.
Let's take a look at the 1-year numbers on the TSX. So the TSX currently right around just below 15,000. So that is a 7% drop, 12-month, and it's down about 13% year to date. The Dow Jones is down about 6% in the last year, but the Nasdaq and the S&P 500 are actually positive in the last 12 months. So to put things in perspective, folks, there are some sectors and some stocks that are actually positive in the last 12 months. I mean, I know you've already mentioned why you think the TSX is lagging, but do you have any further comments on why you think the TSX is lagging? And I know you mentioned energy, but.
Yeah, our guests have to understand that the difference between these indexes. So in the U.S., the Dow Jones is for 30 stocks, and it's more the old industrial stocks. Okay, it's been around since 1896. And there's only 3 technology companies in there: Cisco, Apple, and Microsoft. Whereas the S&P is 500 companies, and it's 20% are technology stocks, and roughly 80% are old, the rest of the economy. And the Nasdaq is a technology index. Okay, so what's really done well are the technology stocks, and what's done poorer are the old bricks and mortar companies or the old industries. So that's why the Nasdaq has certainly outperformed the Dow Jones, and the S&P is somewhere in the middle.
Good. Again, folks, I'm here live today with our guest on the Tetrault show, Claude Tetrault from Canaccord Genuity Wealth Management and the Tetrault Wealth Advisor Group. Thanks for joining me, Claude. I want to talk about what our economist, I believe he's our senior analyst. I should get his title right, but Tony Dwyer. He's a phenomenally smart individual. He's the guy who goes on CNBC quite a lot. He's been calling for a W recovery, and I would mostly echo his statement. So he's calling. He was on CNBC yesterday, and he's calling for a W recovery. In other words, another leg down after this first V, and a retesting of the lows is the words that he uses here at Canaccord Genuity. And Martin Roberge, who some of you remember from our show on here, also calling for some of that. What are your thoughts on that, Claude?
Yeah, I mean, I kind of agree. I mean, I know that I don't know for sure, but I kind of agree that it certainly looks like a W at best, is the way I'd say it, because it's unprecedented, right? So I would agree with Tony.
So the V drop. Let's talk about the V drop. You experienced a V in 1987. Would that be classified as a V?
Yes, it was closest to a V as I've ever seen, because I mean it came down roughly in like a month at most, like more like 2 weeks, and the big drop in one day, hence the left hand side of the V. And then we were back up to where we had dropped within 6 months. And back in 1987, when economic cycles were 4 or 5 years, to drop in a month and come back in 6 months was definitely a V.
Yeah, back then that was a crazy V because they used to take 4 years.
Yeah,
Nowadays, if we took
exactly.
6 months,
Yeah,
we'd say that's an
yeah,
eternity, given how
yeah,
quickly the market cycles are happening now.
yeah, yeah.
Um, I want to ask you about some of the other kind of news that are making headlines. Specifically, we saw an article from Tyson's Food CEO talking about how the supply chain for food is broken. What are your thoughts on that? Maybe you can kind of explain that cycle.
Yeah. So what most people don't understand, it's hard, but I've got friends in that industry, so that's why I'm very well versed. Is that the pipeline to get from insemination of pork to on your meat table is anywhere between 11 and 12 months. Okay. So you have the digestion period, then the little baby pork is born, and then they go through different stages of barns, the most efficient, like companies like Tyson and High Life and Maple Leaf. And then once they reach a certain weight, then they're sent to the refinery. I call it refinery, the
Processing plant.
the processing plant, and then they're cut up, unfortunately, and then it's shipped to our food tables, and the whole process takes 10 to 12 months. So if and most integrated companies are fully integrated, so they control from the start to the end. But there's a lot of people in between that only do one part of, like they put in the food at a different place in the pipeline. Okay, but assuming that most of the food in it goes straight from the integrated, well, if they stop it today, it's a 12-month process in the pipeline. Okay, so it's not like we're gonna starve tomorrow morning. If they close, mind you, if they close the plant, which is the last part, well, then of course we're not going to have food on the table, and it's going to create major repercussions, because you can't. It's a little bit like oil. Like they have to kill if you can't bring them to the plant. Okay, those pigs are in a pipeline. Remember, for 10 months by the time they hit the processing plant. So if all of a sudden the processing plant closes, they have to euthanize them and kill them, because there's no place to put them.
It was a really neat article. I believe it was in the New York Times or the New York Sun. It was just a fantastic article, and something that not many people are talking about. Actually, we talked about it on our show Monday with the epidemiologist, Karen Fowler. Check out the link if you haven't checked it out yet. There's a question here online. I'm going to ask it to you. If you're anticipating a W, would you begin legging in on that second V? This might be a question more for me here. If so, what sectors would be the best to invest in post-COVID, assuming the pandemic changes how we invest? So here's one thing that is incredibly important, and we need people to understand. And Claude, I know you're going to echo my statements here. Just because we think there's a likelihood of a V or a W happening does not mean we would ever advise, nor would we ever go all cash with our portfolios. That's straight up imprudent. And I would tell you that if someone is suggesting that to you, they either likely don't understand your situation, or, the key is finding your actual asset allocation that makes sense given your situation. And then you do tactical shifts. So let's say, Claude, someone's like 50% equities, 20% fixed income, 30% alternatives. Some of the moves we're making clients account, like we're not going 50% cash, right? Like, we've done some of these moves in the past while, what do you think? 5, 10, 15% cash given those situations?
Yes, it depends on everybody, but let's say as a general rule kind of thing, is that the one thing we know for sure is that we don't know what's going to happen tomorrow morning, right? We have a good idea of further along the road. So when you're talking about putting capital to work, is that like we have a pretty good idea where the market will be in 18 months from now, 2 years, 3 years from now. So what we don't want to do is try to pick the bottom and miss out on the long-term rally. So what we have to do, prudent money management, is we have to either put it all in, or if we're brave enough to leg it in as it goes down. And leg it in means, for example, if you're 50% cash, we might take a third of that if it drops 5%, and another 35%, and be all in if it drops another 5%.
Yeah, for our viewers that don't know, I've talked about this many times on this show, but again, a reminder, we believe in legging in very volatile times, whatever cash you may have. I've told you guys in the past, I came on the show when the market was at its, on its way down. I said, if you have money right now, bring it over. What we would advise you to do is to put a chunk of it right away in the market, and the rest we leg in, either over time or either over drops in the market. It's what we believe in. It's a process that works. That way you avoid market timing risk. You avoid, the emotion as well, right? Because it's tough to invest when the market is down. So if you preset those rules for legging in, it allows you to be more nimble and allows you to remove emotion from the process. Because as good as you are and as smart as you are, Claude, and as many market cycles as you are also a human. And it is tough to be buying when every single person on the planet is selling, right? So that's why we have those rules. Okay, good. I want to ask you, hopefully that answered your question, Toby. Again, so if you have a bit of cash, if you're a client of ours, you have a bit of cash now. We've been building a little bit of cash, depending on your situation, depending on if, your risk tolerance or your age or, your portfolio allocation. We may have built some cash for you here over the last couple of weeks. We're not talking millions of dollars of cash, but for you, maybe it's 5%, maybe it's 3%, maybe it's 8%, whatever that number is. If and when the market corrects, we could do something tactically. I want to ask you a question here, Claude. Again, my guest here on the show today, Claude Tetrault, on the Tetrault Show, Claude Tetrault, and I'm Rob Tetrault from robtetrault.com, portfolio manager at Canaccord Genuity Wealth Management. Thanks for joining me, Claude. Please keep the questions coming. We noted a phenomenon happened here in the market. It's called something that maybe viewers haven't heard of. I'm gonna give it to you. It's called an outside down day, where a stock trades below its previous day's highs and closes lower than its previous day's low. Do you have any thoughts on that? What happens with sectors like that? Do you think most of the websites, most of the analysts are thinking that's a negative sign for the market? Have you seen that a lot in your career, and is that something that you follow?
Yes, I mean, I'm not a technical expert by any means, but I've seen it many times, and I do agree with the analyst that with the comments that you just made. Yes. Yeah.
So again, an outside down day, guys, is when a stock trades higher than it did on the previous day and falls below the previous day's low and closes below it. So we've seen that in some stocks this week. I want to ask you about Federal Reserve Chairman Jerome Powell. You've seen it on the ticker here at the bottom of the screen. By the way, fantastic work with the ticker at the bottom of the screen. Mox and Diego, you guys are really, really good. We're stepping up our game here on the Tetrault Show. I want to ask you about what Federal Reserve Chairman Jerome Powell said. Specifically, I mean, this was on Wednesday. We were waiting for this. We were waiting. First of all, did they move interest rates? Why wouldn't they? You want to touch on that first?
Yeah, I mean, what our guests should know is that the Federal Reserve Chairman, Mr. Powell, is probably the most important person that determines the future of the stock market because of all the power.
It's not the man in the White House?
Well, it's supposed to be the Federal Reserve, so I'll leave it at that. But he controls, right, all the stimulus, what you're talking about. So I forget, if your question was about the interest rates.
Yeah, first of all, tell us what happened. Did they move the interest rates? The current band is 0 to a quarter.
Right. No, they left it there, but they said in no uncertain terms, which Federal Reserve chairmen didn't use to say in the old days, is that, look, whatever it takes, we're going to do it. So if you need more liquidity, we'll give it to you. If we have to lower rates, we'll do it to you. And he specifically said that we will use all the available legal tools in our toolbox to save this economy.
Yeah, he I don't know if that was an exact quote, and we're not saying it was an exact quote, but he alluded to the fact that their balance sheet is strong. If there's a need for more stimulus, we will do it. He talked about the recovery being a W, potentially being a best case scenario, which was, to me, that was the one comment that stuck out. When our Fed chairman says, the W might be a best case scenario, talked about whatever support we will need. This is a quote. It may well be that the economy will need more support from us. And, we will do it. The answer will be yes. So they're going to do whatever they need. They did not move the interest rates. Interest rates stayed at 0 to a quarter point, which is the band that we're in right now. I want to talk about the GDP numbers, Claude. I don't know if you saw them this week.
Yep.
I'm sure you did. Let's start with the U.S. GDP numbers. So the Q1 came in 4.8% contraction. What are your thoughts on that?
Well, my thoughts are, it's not good, first of all, okay? But my thoughts are mixed because you're shutting down anywhere from 40 to 80% of the economy. So, of course, GDP is the output by its citizens of a country. So if 70% or 50% or 40% of the people are now working, for sure your GNP will go down. But what's more important
your GDP,
is
your GDP, Claude.
Of your GDP, correct.
Yeah.
So, but what's more important is what's going to happen next quarter, and then the third quarter will be more important.
Yeah. So that number is an annualized number. So that they take the first quarter and they annualize it over the course of the year. That's the worst reading since 2008. In fact, there hadn't really been many negative numbers. So to answer a question that people have asked me before on this show, do you think that so a recession is defined as 2 consecutive quarters of negative GDP growth? Is there going to be a recession in the US and in Canada, Claude?
Absolutely. There's zero doubt in my mind.
Yeah, because there cannot be a situation where we don't have contraction in Q2. I mean, we're a month in already. And, this morning, my parking lot was empty here at the office. Although I will say this, I don't know if I'm going into the office every day. Our office is empty. I'm pretty much the only one in here. I come in to make sure that checks are printed and whatever actually physically needs to get done gets done, kind of as an essential service. But this morning, there were cars on the street, way more than I've seen. And yesterday, there were more cars on the street. And the day before, there were more cars on the street. I'm seeing people in the buildings. I'm seeing people on the streets. I don't know what your vibe is out there. Other guests, feel free to share with me. I'm curious if you're thinking and if you're seeing with your own eyes more activity. I mean, we know that Premier Pallister in Manitoba announced reopening. And maybe we could talk about that briefly, Claude. Saskatchewan announced a plan. Manitoba announced a plan. Some U.S. states have announced plans. Newfoundland, I think, just announced a plan. What are your thoughts with respect to that and what that's going to do to the GDP?
Well, coming back to your comment about the economy there, as a matter of fact, the Economist had a good report out today because they were talking about Europe, where they've reopened ahead of us. And the Economist is labeling it the 90% economy, where people will come back, but a normal, that's pretty negative, but still, the normal is a 90% economy, where if we get back to where we were, we're only going to be at 90%, which touches on the reopening of Manitoba and Saskatchewan. Is that, my daughter is a small business, but even if they can reopen, it literally will take 6 months to 12 months because of the social distancing, only so many people in the building, and everything that you guys have heard on the news. So we're going to come back and it's looking great. Like you say, you're starting to see people at the office. But what will be the normal is the key for the stock market.
The good thing about Tanya, shout out to my sister, Tanya Tetrault, who was on the show, who was a guest a couple of weeks ago, is that she's, revolved and reinvented her business online and training people remotely. I know because I'm trained now remotely through an app. It's pretty neat for those of you who are worried about your fitness. Comment here from Esther. Stores seems to be getting busier. People are itching to get back to business. Absolutely. I would agree, Esther. Now let's get to the Canadian GDP numbers. My guest, Claude Tetrault here on the Tetrault Show, and I'm Rob Tetrault, Portfolio Manager here at Canaccord Genuity Wealth Management. Claude, I want to ask you about the Canadian GDP numbers. The Canadian GDP was essentially flat in February. So the number was 0% gain month over month. So we're not talking about March. We're talking about February. The Canadian, the U.S. GDP numbers are not quite released in the same way. U.S. GDP releases quarterly numbers. Canada released a February number. There was no growth in February. This is before COVID. You probably recall kind of what caused some of that. I think you probably do, right? What are your comments on that?
Yeah. What happened in February, for people we've forgotten now because of COVID, but remember the trains were not operating because of the blockades. And, a lot of the economy
was the teacher strike. There was the teacher strike in Ontario as well.
There was the teacher strike, the protests, and all of the above caused like Canada's a pretty good country, one of the best countries in the world when it comes to economic growth, and to have zero growth in February means there was already something wrong, right? That was blocking it. But now you hit COVID-19, so the number could have been -4, -8. Who knows?
Well, I think if we would have seen a -4 number for February, no, we wouldn't have seen that.
No.
That would have been devastating.
No, I'm talking about the future.
The future. Okay, so they did release, just as hot off the presses, they released I'll call it a tentative number or a projection number for March. They have not released the official numbers yet, but they said that the preliminary numbers are 9% contraction for the month of March, 9% contraction for the month of March in Canada, with that projected to get dramatically worse in April.
Wow.
A 9% contraction in that month, annualized, is pretty significant, because if you contract 9% every month for 12 months, there's nothing left, right?
Yeah. I find it. I haven't seen the numbers, but that would still shock me. I'll have trouble sleeping tonight if that's the number.
No, guys, we don't need to have trouble sleeping. Life is fine.
Okay.
I do want to talk as well about Royal Dutch Shell. This is a headline that you have likely seen on the bottom of your screen here in the last while. This is a company that's been around forever. I don't know the exact time, but it's been around forever. They cut their dividend, Claude, for the first time since World War II. What are your thoughts there?
Yeah. Well, I mean, for a company to cut their, and don't forget the Royal Dutch Shell is one of the largest companies in the world. They're fully integrated. It's not like their only product is oil. And for them to cut their dividend after all these years is there's a message there, right? And I don't want to get into it, but it's not a good message.
Well, they're preserving capital. That's the message.
Yeah.
Clearly, they're saying we'd rather have our capital in our bank, in our vault. We don't care if you're upset at us for cutting the distribution. It means more to us to keep the cash in the coffers than it does to appease our shareholders, because the stocks typically don't react well when you cut a dividend.
Right. But my point was, the message, the ulterior message they're sending is that, wow, we're really afraid of this. Like, because normally we can weather a recession, a 2, 3, 4 year recession without cutting the dividend, because they've done it for 60 years. So for them to cut right now, it just shows how afraid they are. Yeah.
Now, I do want to remind our viewers that, like, as negative as the news is, please don't be surprised by it, because you are seeing it with your own eyes, right? You're seeing the result of what you see on the street, what you don't see because you haven't left your house. And I mean, your credit card bills are zero because you're not going to the restaurants, and you're not going to the bar, and you're not going on trips, and you're not going to Disneyland. So, your spending is dramatically down. And what you're seeing is not really surprising, I would say. It's the result on paper of what we're living. Now, the good news, Claude, I want to talk about the good news. The fiscal stimulus that, like, I'll call it a bazooka that's been unleashed in Canada and in the US, something that we've never ever seen. What are your thoughts on that? And maybe before I could clarify specifically what I mean, or you could clarify, I'm talking about both the dollars that are going to be going into our pockets, Canadians and Americans, and I'm talking about the stimulus that's happening on the monetary policy side.
Yeah, well, I mean, the experts tell us that that's the only way we're going to come out of this. They don't want a repeat of the 1930s when there was zero liquidity. So I'm going to side with the expert that we have to do this. I'm not so sure what the ramifications are long term to it, but it's certainly not good to have when we, like, in Parliament, they were arguing that 20 billion deficit was terrible and they should never have that. And all of a sudden, fast forward a month, and we're at 250 billion. So there's going to be ramifications. I just don't know. But to say that it shouldn't have been done, I'm not going to go there.
Yeah, I think they did the right thing. I think you needed to have stimulus, otherwise people are starving, right? You can't have people starving. What kind of recession would that do, right?
Exactly.
So I think they did the right thing, and we'll just pay the price, and we'll see what that looks like in a year or two. But I don't think there was any other option.
Yeah.
Earlier, I talked about Tony Dwyer. I pulled up his quote here just so that I have it accurate. He basically says that investors are getting ahead of themselves as they're expecting an economic V-shaped recovery. He says we've got this epic battle between monetary and fiscal policy on one side and weak economic earnings and earnings data on the other. And his title is Managing Director and Chief Marketing Strategist at Canaccord Genuity. He's also worried about the yield curve. He says that having a very flat yield curve is telling you that the economy is going to be very slow coming out of the recession. And you just want to be a bit careful not to get too far ahead of yourself. Basically, his concerns are that, the market's got its blinders on, has forgotten the fact that 30% of the population, and I want to get to the job numbers in a sec, but has forgotten about that. And I've kind of asked you about this before, but, does that comment make sense to you?
Yeah, absolutely. I totally agree with Tony there.
Yeah, Tony's usually right on these things. And we're going to get him on the show one of these days here. I can't wait to book him. His schedule is incredibly busy, but he's coming. I also wanted to ask you about the job numbers. So the U.S. job numbers were announced. I believe it was 3.8 million people applied for unemployment benefits last week. So we're now talking about weekly people that are applying for benefits. If you extrapolate the data in Canada, I would imagine it's probably 300,000 in Canada. They're about 10 times their population. So that brings us at 30 million in the US. And I haven't seen the latest Canadian numbers. They don't publish them as often as I would like to, but somewhere between 2 and 4 million people in Canada have applied for unemployment benefits. We do think that this is short term, however, and we've never seen anything like this in the job numbers, right, Claude?
No, that's right. If those numbers had occurred during a non-pandemic, the market would have just basically collapsed and saying, hey, what's happening to our world here?
But it couldn't really happen, right, in a non-pandemic, because the capitalist system works that, dollars are created and wealth is created, and people are hired to create that wealth. No matter what we think machines are going to replace us or whatever, there's always going to be wealth that needs to be created with human intervention, right?
Correct.
Yeah. I do want to ask you, what are your thoughts, Claude, kind of some of the bubbles that we had seen in the past? So I'm thinking about the cannabis one. So you and I, we talk every day, but we talked a lot about cannabis in the last 3 years. And cannabis now has, I don't know, bottomed is the right word, I'm not sure, but it's fallen a lot, right? The general cannabis companies, the Auroras and the Canopies and all of the MedMens and all of the kind of cannabis companies, they were the darling 2 years ago, year and a half ago. They've fallen 95%. They're starting to look attractive, I would say, and they're starting to look at some of the valuations that we were talking about 2 years ago, right? Do you have any thoughts on that bubble and what that did to the psyche of investors? And are people just staying away now because they're scared of it?
Well, I guess it's it reminds. I'm going to go back. It reminds me of other bubbles in that the phase one is the euphoria, because it's like the latest one that everybody will remember was the .com in the late 90s and earlys, and like people are just mesmerized by such a great opportunity, and the marijuana craze was the same. Like people were saying, that first they were saying it's a 5 billion market, then 10 billion, then 20 billion, and then people start throwing around 50 billion and 100 billion, which is more than the world economy almost. So during those periods, these stocks go up strictly for non-valuation reasons, and then when the bubble hits, the cycle is, and after a few quarters where they're supposed to have earnings, and they realize that the valuations were way too high, and then of course then you get the crash. So the point though that has to do this market here, which is not a bubble, is absolutely not a bubble at all, is we have to worry. The valuations are important, and during these crises, during these bubbles, and that's why we had that bubble.
Yeah, I think it's really interesting. Anytime we have bubbles, you and I, we talk about it. This is euphoric. It's crazy. This has to stop. It doesn't make sense. I do want to talk about earnings, Claude. We've seen some of the earnings. By the way, feel free to send me some questions you have with respect to earnings. there were some big hitters that announced earnings this week. And by the way, if you guys have the aftermarket numbers for Apple, feel free to send it to me. I just noticed that Apple reported earnings. Let's maybe start with some of the earlier ones this week, Claude. I'm not sure how closely you followed them, but one that I followed closely is Alphabet, or Google, otherwise known as Google. The stock was up 10% or so, and after, I believe they announced their earnings yesterday or Tuesday, and the earnings were up big. Did you happen to catch that one, the earnings?
Yes, I did, and it was better than expected, because I mean, I could go on for hours about Google, right? But they're not bricks and mortar, so their business operated as if there was no COVID-19. The only negative was some of the companies advertised a little bit less on Google, but every other aspect of their company was just on wheels. So there's an example of why the Nasdaq has outperformed the rest of the market.
I followed this one closely, and I'm very interested in online revenue and online earnings and data. I'm a big data guy. My brother Charlie, maybe I'll get him on the show at some point. We had Tanya on the show. We had Claude on the show. Maybe we could get my mom, Annette Tetrault on the show. Maybe we get my brother on the show. Who knows? But he's a big data guy. He believes that the future is data, and he's a big believer that if you control the data, you will figure out a way to monetize that data. And obviously they've already figuring it on, and figure out the way to monetize that data and use it. So the neat thing about Google, if you follow the earnings, their revenue was actually below expectations and their profit was kind of in line with expectations. The reason the stock was up 10% was during the conference call, the CEO mentioned, we fell a little bit early in March, but what ended up happening is people immediately saw, they have a natural checks and balances systems on Google, because their stock, if their stock reflects revenue on YouTube, revenue on Google, and all the other stuff. But if you're advertising on Google and it's $5 an ad, and all of a sudden you can get that same ad for $1 because no one else is advertising, well, obviously you're going to start spending more, and then you get a natural regression to the mean, and it's got a natural checks and balance system. And he said that so many people are watching YouTube right now, Claude. Their viewership numbers are through the roof on YouTube, and people are on their phone more than ever before. I guess we shouldn't be surprised to see that at all, right?
Yep.
I also want to talk about some of the other earnings. Apple just announced their earnings, so the revenue growth slowed down as it saw supply and demand impact from coronavirus. They launched some new products. Apple is up 2% in extended trading hours. The earnings per share were $2.55. Revenue came in at $58 billion. Gross margin 38%. So let's put this in perspective, Claude. They made $2.55 per share. The iPhone revenue is down 7% from last year. So $2.55. Let's call that $10 a year. The latest trade on Apple was right around, I don't know, was it up or down today? I don't even know. So regardless, let's call it $2.55. Do I have my numbers here? What do you think of that multiple? Basically, is what I'm asking you. They raised their dividend, their sales top best.
Well, Apple is not a company that I'm an expert, but I think it's a reasonable a price to earnings. The price to earnings will always be determined by its future growth, right? Because once a company's mature, the PE goes right down to the low teens, or 10 to 15. So if a high growth company like Apple, I think the PE is at around 18 to 20 there. I'm not sure. But that's certainly a reasonable multiple, because I mean, it is still one of the better companies in the world, and still a fast growing company.
Yeah, the latest, it closed just below $300, Apple.
Yeah.
And they're making $10 now, but generally PE will either be measured on a forward PE.
Yeah.
So $10 would be, call it 29 times current PE, annualized PE. But a forward PE would probably be closer to 22 or 24. PE, exactly. By the way, maybe you could explain PE for our viewers.
Yeah, the PE stands for price to the price earnings multiple. So it's the earnings divided by the price. So in the case of Apple, the stock's trading at 300. It earned $30, so it earned $10, so it has a 30 PE. So it takes, in other words, it's going to take 30 years to get, assuming there'd be no growth, and that's, you bought that company yourself, you would get your money back in 30 years, or it's got a PE yield of 3.3%. So nobody would buy it for that. Anyways,
it's a really good way to measure it is how long does it take you to get your money back at that level of profit?
Yes.
Right. So a 30 PE would take you 30 years of profit in order to get your money back. But why won't it take you 30 years, Claude? Why will it not take you?
Because their earnings are going up 30 to 50% every year. So next year, if the stock stayed at 100, next year they're going to make $50 a share. So their PE will now be 10. Okay, so that's why it won't trade at 10. So that's why if they double their earnings, the stock might not double, but it will certainly go from 300 to 450 or something like that. So these growth companies have a higher PE because they're growing and their profits are growing exponentially.
There's a headline here on CNBC that I'm reading. If you're a shareholder, you might want to sit down. That is a quote. Amazon reports earnings plans to spend all Q2 profits on coronavirus response. They're going to spend all of their money. I'm just reading the headline here on coronavirus response. So they earned $5 a share. The revenue was $75 billion. They reported earnings. Their web services revenue was $10 billion. So that is trading stocks trading at 10, 20, trading at close to 100 multiple, give or take. They just announced earnings. I don't have the latest on that one, but the other one that announced earnings, Facebook announced earnings yesterday. So pretty much all the large caps are announcing earnings. Guys, if you have questions on earnings or anything around earnings, please make sure to put it in the question. We'd love to chat about it with you. Claude, what is your thought generally about earnings right now? And should we be even reporting earnings I mean, what's your thought? I know we have to report earnings because it's critical, but like when we're going to get to like airlines reporting earnings, like, Boeing reported earlier this week, and it's tough, right? To put much weight into these earnings.
Yes, because they're closed down. So obviously their earnings will be way down. So I'm not saying earnings are meaningless, but there are times where earnings are worth a lot more they report than other times. And this is a time where, like American Airlines, their first loss in, 12 years, and they lost $2.2 billion. Well, of course, they don't have, they have 5 planes out of 1,000 flying. So, of course, they're going to lose $2.2 billion. But the bigger question, and we don't have time right now to answer that, is for how long will they lose $2.2 billion every month? Okay. And how much money do they have? If they only have $10 billion, that sounds like a lot of money, but that'll only last them 5 months, and then they would go bankrupt. So, behind the numbers, you need to analyze a lot more as what it actually means.
I love this ticker on the bottom here. Their sales are up 75 billion. They saw 4 billion in COVID costs. And they're open text. Okay. With respect to, you and I talked about this the other day, just a story that you shared with me about the Winnipeg airport, just how busy it was and what was happening. That was kind of a neat story and what we think with airlines and airports.
Well, as part of just, keeping up on things, I just Googled the Winnipeg Airport Authority to find out, like, who's flying today, like, who's going anywhere. And there were 7 flights going out, 2 to Toronto, 2 to Calgary, 2 to the north, and there was 11 flights coming in. But the interesting point was at the bottom, they said that they had 72 people that went through the turnstiles that day. So that was 18 flights divided by 72. So that was an average of 4 people per plane. Now, obviously, my numbers must be wrong, but that's what I read. So my point being is that either they're going to have to start charging $10,000 a seat to break even, or else they're going to have less flights, but they can't make money at 4 people on a plane.
Do you think we're going to see significant changes in the airlines? We've already heard them talk about switching the seats around, having people face different directions. They're not going to be able to put as many humans on planes as before. Supply and demand would tell us, Claude, that if you can only fit 1 every 2 people, you got to charge double the price, right? Do you see that happening? Do you see the government subsidizing that, or do you see people just stopping the fly?
Well, I hope we don't get into government subsidizing people to fly. We're not going back to when I was a kid, we had horses. We're not going back there. going to Montreal by horse.
Did you guys had horses, Claude?
Yeah, we had horses on the farm. I was only 5 years on the farm, but anyways, so we're not going back to the horse and buggy day. So we will. I'm absolutely certain that we are going to fly again. Okay. Now I just don't know what it's going to look like. And on your point, if there's less people flying, in other words, if they can only fill out the plane by half the people because of COVID distancing, economics would suggest that they have to charge double the price in order to make their economic return that they want. But it's flying is still an elastic elastic product. So if you charge too,
let's explain that topic. Elastic good, an elastic product, just so for the viewers.
Okay. Well, an elastic product is a product that like people will buy depending on the price. Okay. There's things that it doesn't matter what it costs. You need, for your health. You need pills for your heart attack. You're going to buy it. Case closed.
Yeah.
Whatever
If you
it costs.
a perfect example is if you had to pay $10 for a bottle of pills to keep you alive, you would pay it. If you had to pay 100, you would pay it. If it was 1,000, you would pay it. Like that's a great example.
Yeah. So airline is the opposite. It's inelastic in the sense that like we're all going to fly. We have business trips, or we're going to take our families to Mexico for the winter and that kind of stuff. And if it's reasonable, 500, 1,000, or 1,500, we're going to go. But if all of a sudden, because we can only fly half the people and the price is doubled, well, then a lot less people will be flying.
Question from one of our guests about the aerospace industry. This is not something we talk about a ton, you and I, but do you have any comments on that?
Not really. Like it's not really. The only comment I'm going to make is that the aerospace is not like necessarily the passenger airlines, right? I mean, there's a lot more. There's a lot of traffic that carries goods. Okay, to China, and Winnipeg is actually a large hub. So that part is going to continue, like as if it might even grow a lot quicker than it did in the past, because we must continue to ship our goods and services. The passenger part, I'm not so sure. So that's my comment on that.
Okay. I'm Rob Tetrault, robtetrault.com. I'm sitting here with Claude Tetrault. My guest today happens to be my father as well. Claude, portfolio manager from Canaccord Genuity Wealth Management here at the Tetrault Wealth Advisory Group. Claude, I want to ask you about you've been alive longer than I have. You've seen something that nobody ever thought you'd see with your own eyes. What do you think are going to be some of the actual changes that are going to happen to businesses that people maybe aren't talking about, or what do you think will be worse than what people are talking about? Do you think there'll be some dramatic changes in behavior over the course of the next? I'm not talking about the next month or two, because I know you and I both know that people will be hesitant over the next 6 months, or I'm talking long term, 5 years plus. Do you see any behavior patterns dramatically changing, which will alter some businesses dramatically that isn't being mentioned?
Probably not. I mean, like technology, without the COVID, the world was going to change anyways, as far as how we do business with technology. You see Zoom, you see all of this. Like I'm working from home, and I've got 5-6 computers, and I'm having a meeting with you in the middle of nowhere in the bush here. So that's going to change. However, we've gone through a lot of crises. 87, you name it, the 60s. Time heals everything, and at some point, we're not going to fly because of COVID. We might fly differently, but time will change that. Now, our patterns of working, though, because of technology, will change.
Yeah, I think there's going to be some changes with respect to efficiency. And, are people going to jump on a plane now to go to New York for the day? I don't know. Like, I think that might stop, not necessarily because people are fearful of traveling in coronavirus. I think just because efficiencies. I think we've learned, I've personally learned so much in these last 2 months with respect to my business, my team, operationally. I think there will be some changes for the better, Claude. I'm an optimist, though. I do think that we are going to learn from this. We're going to come out stronger. And I tell that to my staff every day, every week. It's time to learn, increase our processes, be better at everything we do for our clients. And I think that's going to happen with every business. I think, my sister's business is a perfect example. We talk about her all the time, like she's here, but, efficiencies, operationally, etc. Question about online here about, will the CFL get its subsidy? That's a bit of a joke, I think, but maybe that's a real question. More importantly, what are your thoughts about the professional sports world? You like sports as much as I do. What do you see happening? Let me ask you a question. Maybe give me your general thoughts first, and then I'll ask you a question. What are your general thoughts about the sports world?
I'm like everybody else. We miss it. I can't see the future without going to hockey games and football games and all of that. But I see COVID, so I just don't know. I just honestly, I just don't know.
Okay, let me ask you this then. Let's say the NHL was able to resume and they weren't able to open the doors to fans. It was extremely tight and they weren't able to open the door to fans. Do you see a situation where the NHL would agree, the players would basically agree to play for a third of the price or half price, because all they have now is the TV deal? They don't get the ticket revenue. They don't get the concession revenue. So they lose on all of that. So do you see a situation where do you see a deal like that potentially happening just to salvage that process?
I don't see it in the very near term, but long term, it would have to happen, because everything in the world comes to supply and demand. And if there's the hockey players would rather play for 3 million than 10 million, and rather than have nothing. So they're not going to do it right away, because it takes a mental attitude adjustment. But it's not going to happen in the short term. But if we were to continue in the long term, it would definitely happen.
Yeah, I think if you're talking about the forces of supply and demand, let's take it a step further, Claude. There is, on the labor force of the NHL hockey players, there is upwards pressure on supply, right? In other words, if they paid me, I'm a fourth liner in the senior A hockey here in the Brokery, I'd go play in the NHL if they gave me a couple mil. So there's a bunch of Rob Tetros out there that would gladly take Sidney Crosby's spot, right? So you do have upwards pressure on demand. Therefore, there's going to be someone who's going to want to play for 2, 3, 4 mil. And I think it's going to happen inevitably at some point. Now, do they renegotiate this deal? Probably not. But I do think that pressure is coming.
Yeah, it's going to take time. But the other thing you didn't mention is that when they do reopen and they're asking you for how much, I don't know how much your box costs there at the arena, but, if all of a sudden there's an inferior talent, you might be asking for a cut in the price.
Very good point. Yeah. So no one has a crystal ball. This is the last day of April. So we're a third of the way through the year. Care to make any, and I know your style, I know you're going to shy away from this question, but care to make any kind of general predictions of what you think we'll see the rest of Q2 and then into Q3, specifically about earnings and stuff, and then the rest of the year 2020?
Well, you're right. I one thing I know is that I don't know what's going to happen in the near term. But if we go to 6 months or longer, or 12 months, we're not going to die here. The economy will come back, but it scares me in the short term. Not because it's just we've never seen this before, and there's no script, and there's no. If this had been an economic recession, I could have said, look, Rob, this is what happened in 91. This is what happened in these years. This happened in the 20s and the 30s, and we'll get out of it. It's not the end of the world. But the world has never seen, opening businesses at 30% or 40% or 50%. So it's so uncertain that I basically have no predictions for the near term, except I know one thing. During uncertain times, markets normally don't make all-time highs during uncertain terms. People are more careful.
They're more likely to make all-time lows, although we don't think that they're going to make all-time lows. I will go a bit further, Claude. I'm gonna step a bit on a ledge here. You're right. We don't know what's going to happen tomorrow, next week, next month. I have no clue. You have no clue. We practice prudent investment advice, and we do that every day in our portfolios. That being said, I am confident that capitalism will prevail. I am confident that where there's a dollar to be made, we will want to make that dollar. Businesses will want to make that dollar. New ways of spending will occur. New ways of operating. New businesses will come out of this. And I'm extremely confident that I don't know if it's a year or 2 or 3, but not short term, we are going to make new highs on the TSX. We're going to make new highs on the Dow. We're going to make new highs on the S&P. That is going to happen because capitalism will prevail, and the stock market has a 150-year track record of continually delivering 10+% compound growth, creating wealth. And how do they do that, Claude? How do they create wealth? How do these companies create wealth?
Well, I mean, people create wealth by growing their businesses and making more money. And I totally agree with you. You asked me in the short term, but in the long term, I totally agree with you that we will make new highs. It's just a matter of when. So we have the strongest economy in the world, Canada, US, the top 7 countries in the world. And we are coming back and we are making new highs. I just don't know when. For sure.
And I'll say with respect to Q2, you and I are going to watch earnings for Q2 quite closely. And I'll make sure to bring you on the show 3 months from today when Facebook and Amazon and Netflix and the banks are announcing earnings for Q2, because that's when we're going to start seeing what happened in April, May, June. April, May, June is going to be the tougher quarter. So we're going to bring you on and we're going to definitely make absolutely sure. And you're probably going to be on before then, Claude, because you make a great guest. But you're going to have you on before then to talk about that. But we're going to keep a close eye on earnings in Q2 because I don't even know what to expect there, but I don't think it'll be pretty. But that's why the market's at where it is today, right? The market's not at where it is today because Apple made, $5 a share today. The market's at where it is today because we think as a market, as individuals, as consumers, that the future earnings are not going to be good, right? So that's why the market is down, folks. Remember that the market always takes into account all of the opinions of the entire planet, and that's reflected in the stock price. Hey, I want to ask you about a quote that you always say around the office. And it's basically that the market doesn't care what you paid for a stock. I like it. You're a great storyteller, Claude. And the reason you're a great storyteller is because you live through it and you tell it. Explain that one. And you're also very wise with your sayings. How does that one work out?
Well, the reason I say that is I hear callers on BNN and people even call us and say, I paid $10 for the stock and it's now trading at $12. Should I sell it? And my answer right away is always the market doesn't care what you paid for it, right? In other words, what's that company worth today is the only thing that matters, unless there's a taxation angle to it, okay? I'm going to avoid the taxation angle for now. So whether you paid $100 or $1 for a stock, if it's trading at $32 today, that's the only thing that counts. Is $32 a good price? Should I be buying it at 32 or should I be selling it at 32? What you paid for it is, I don't even want to know.
That's such a great point and so well said. And, every single day, every single moment of every single day, if we own a stock in a client's portfolios, that means we want to own that stock at that price, right? And the moment we don't want to own it at that stock, at that price, it's no longer in the portfolio, right? So every stock in the portfolio, we want to own at that price, and everything that's not in the portfolio, we don't. And you could push that a bit further. Every other stock on the planet, because they're not in our portfolio, we do not want to own them at that price, is another way of looking at it, right?
Yeah. Well, that's pushing it because some stocks we don't follow, right? So we don't know. But of all the stocks that we know.
Fair enough. Good point. And thanks for keeping me on the straight and narrow.
Yep.
We're running up on the end of time here. So I want to thank you, Claude. I'm Rob Tetrault from robtetrault.com. I was here today with our guest, my father, Claude Tetrault. He's a fellow of the Canadian Securities Institute here at Canaccord Genuity Wealth Management. If you want to have some further questions or chat on this, go to www.speaktorob.com. I'd be happy to have a no obligation consultation. We got some really neat guests that are booked in the coming weeks. We have actually booked a dragon. So you guys are going to see that being announced in the near future. We got some CEOs of some multi-million dollar, $100 million, hundreds of $1 million of companies that have been booked as well. Claude, you got great shoes to fill, and I look forward to seeing the next guests that are going to fill them. Thank you so much for your time, guys. Stay safe out there. The month of April was great. Stay positive. There's a lot of good things happening in the market, but continue to expect the possibility that we might see some volatility. Thanks so much, guys. Have a great day.